Okay, hi everyone. So thanks for joining for this workshop. So this workshop is about funding options, investment readiness, paths you can take, and trying to give a couple of kind of tips and tricks and techniques to think about. So hopefully it'll cover quite a lot of things. We're trying to make it quite interactive as well. I have my chat open for those who are watching live. So if you do have any questions at any point, please do share them. I'm really keen to hear your views. And equally, like Michelle's just done, if you could share just a bit about who you are, what company you're from, what you're interested to learn more of, that would be great. That always helps me to make sure I'm kind of pitching it in the right way. So today's session is part of Escalate. Rosie, do you mind giving a bit of a summary of Escalate, what you've achieved to date and what's next?
Yeah, absolutely. So Escalate is a 3-year business support program, which is sadly coming to an end next week. It's been an amazing program. We've supported over 500 businesses in Oxfordshire on the program, we've had an incredible community of purposeful businesses, social enterprises and trading charities that have kind of come together under the umbrella of Escalate. We've got a couple of events before the end of the program. So we've got a marketing workshop tomorrow, and then next week we've got our final event, which is Recruitment Revolution, which is at Tap Social in Botley, which is all about recruitment. So whether you're looking to recruit your first employee or your 50th, or you're looking to work with freelancers, it'll be a really good space to come and explore and look at options and kind of think about creative ways to recruitment and retention. Plus, it'll just be a great opportunity to network. We've got lots of great businesses that have kind of come with us on the journey of Escalate that will be there. So definitely one to come and check out if you're free next Thursday. I'll share the link to all the events in the follow-up email. Post next week, Oxlep will still be delivering support through their Growth Hub. So you'll still be able to access business support via Oxlep. And we at OSEP are kind of exploring options to make sure that we're still able to support social impact organisations in Oxfordshire going forwards as well. So watch this space. Brilliant. So I'll hand back over to you, Gareth, to crack on.
Thank you, Rosie. Yeah, it really has been an exceptional program. So if you even with there being less of the kind of workshops and activities, there's still lots of recorded content and things, and an amazing community to engage with. So I'd really highly recommend, if you've not at this point, getting in touch with the team, Rosie, Grant, and Ashley, and taking advantage of that. So a bit of kind of context. So I'm Gareth. I'm the founder of a company called Town Square. We've got a network of spaces across the UK where we essentially try to build communities of entrepreneurs who support each other, share best practice, share their biggest pain, and really trying to build that social capital, although today's more on the kind of more traditional capital. We've been doing it for about 5.5 years, and one quite important part of our identity is that we're a B Corp. That was something that was kind of essential to us at the start when we first decided to launch Town Square, was having the kind of mission locked in. So for those of you who aren't familiar with B Corp, we've got stacks of content on that as well. But it's a certification that shows that you have essentially locked in commitments to your environmental responsibility, your social responsibility, and the way you run your business. So if you're not aware of it, drop a note. I'll share my contact details later as well by means of a follow-up. But we've got lots of good resources and things as well. So we can share more on that. But that's enough about me. Today is about fundraising. And I recently was reading this excellent book by Dan Kieran. He's the founder of Unbound, which is a crowdfunding platform for authors and book publishing. And he kind of set out that as a founder and a CEO, you have 3 responsibilities. So the first is to provide the company's vision. The second is hiring people who are better than you in every role. But the third is to make sure the company never runs out of money. I think it's one of those really interesting things that sounds nice and straightforward, but it's anything but. That's really what today is going to be about, is understanding a bit more about what those options are, and then going into more detail on crowdfunding as a kind of route. So when we're talking about funding, it really starts with knowing what you're trying to fund or knowing what's on the shopping list. So I just want to take kind of 2 or 3 minutes, if everyone's got pen and paper in front of them, to essentially kind of write down a list of what do you think you need to raise money for. So what's on the shopping list And to make it a bit easier, I'm going to suggest adding 3 headings. So normally I suggest putting 2 lines down. At the top of the first heading, put £10,000. Second heading, put £100,000. And at the top of the third heading, put £10 million. And essentially what we're looking for is just anything that you would buy or that you would prioritize or that you would do if you had access to that money. It might be one thing that costs £10,000, or it might be 20 things that come up to £10,000. Like I say, I'll give that 2 minutes. And yeah, the goal here is to think about those things. I should say one really important point: you cannot buy a yacht, you cannot buy a desert island anywhere, you can't retire. This has got to be with the aim of kind of furthering your mission and growing your business. Sorry. And also I should say, we're not giving you a check at the end for £10 million to whoever has the best list. Always feel like it's important to get these things clear. So yeah, we'll give that about another 90 seconds or so. So think about things that keep you moving, things that are blockages or barriers, things that maybe feel impossible or feel out of reach. Think about those things that you want to spend money on, those things you don't want to spend money on, things you've already spent money on that you wish you hadn't spent money on, all of those things. We'll give that about another 50 seconds or so. If you feel like you've got a good list starting to form, start drafting a message in the chat box for the 10,000 column. It'd be good to hear what you've got on that list. I'm glad to hear, Anya, you've done some crowdfunding already. So that's good. And interesting to hear, the kind of pros and cons. So I really want this to be quite interactive. So any ideas, any experiences you've had already, please do share them back into the chat. We'll give that about another 10 seconds or so. So Darren's coming with inventory. Any examples, Darren? Is that kind of materials? Is that product? Is that what falls into that category for you? Feel free, making a much better new website, that's good. Creating a perfect space for members, so new furniture and a redesign, that's good. Feel free to jump in on the mic as well if you, I like to hear other, this might come as a surprise by the end of the workshop, but I don't like just listening to my own voice. It's always quite nice to hear what everyone else thinks and what's on everyone else's list. So Nick, better website, other comms, good stuff. I always find once one person speaks as well, it makes it a lot easier for everyone else. It's like a wedding dance floor. No one wants to be the first one on the wedding dance floor. Cool. And then if we've kind of exhausted that, so what else would you put in the 100,000 category to help with social media? Thanks, Becky. That's good. And then any kind of big ideas for the 10 million? What have we got on that list? Inventory trade shows. That's good. I like that. If there's a specific trade show as well, that's always quite good to know. If there's somewhere which is like it's always felt out of reach. All-terrain wheelchair to enable involvement as a facilitator. That's good. Thanks, Stuart. Towards facilitator support for eco-anxiety for youth. Cool. We've got some good stuff coming through. Budget for speakers. That's good. Digital marketing, shows, ads. Cool. Okay. So here we go. This is good. Top drawer stuff. So website, exhibition, social media, community workshops, kitchen, washroom, total refits. This is good. So the first thing that we kind of do when we're looking at that, the reason why I start with this exercise is because quite often we all have this like mental block when it comes to money. We think of money as being a barrier that prevents us from being able to make progress. And by breaking it down into a shopping list, it can help us to think about what do we need now, what do we need to own, what could we share, how soon do I need it, or all of those things. A lot of this is going to, in the interest of time, is going to be rule of thumb stuff. The one really important rule of thumb that I always tend to recommend using is looking at that spend and what's on the shopping list how much of it is revenue expenditure and how much of it is capital expenditure. And the reason why it's important to do that is because you have different access to different funders based on what you need. So examples of revenue would be salaries. So mentioned there around project management, delivery, specialist skills. You might have, bringing in a consultant to do the marketing, your staff growth, your rent, so taking on new units, your cost for utilities, running costs. The idea here with your revenue costs is that it's kind of an unavoidable expenditure that you have to kind of suck up when you're growing your business. You might be able to control certain parts of it, but other parts you have no choice. And the other thing is that once you've spent the money, generally you don't have anything to show for it. And what I mean by that is that you don't have something you could then resell back on. So once you've paid someone's salary for the month, that money's gone. So the flip of that would be capital expenditure, which is any equipment, any vehicles. Someone's mentioned there about land. Lucy mentioned about land. If you needed to buy a van to be able to get out and about, if you needed to buy the wheelchair for additional accessibility, any premises. The reason why this is important to have broken down on your shopping list is because if you take out a £10,000 loan with a bank and you buy a van and your company fails for whatever reason, you can sell the van and pay back the loan. If you take a £10,000 loan out and spend it all on salaries and consultants and experts, you can't then reclaim that money. That money has to go into creating some other value. The other important thing here is that it breaks down that shopping list into kind of a clearly divided line. So say in your mind, you've got to need to raise £100,000 to get the business going. It might be that the £70,000 of that is capital, which might be easier to raise. And then the £30,000 might be in-kind support or some other kind of partnerships and things. So it's really important to regularly look at your shopping list, break it down into, right, what is in this category, what's in that category, and looking at it from that perspective. As part of that, it's really important to have a clear financial plan. So if you've not done a recent cash flow forecast or any kind of projections, there are tools and resources out there. If you don't have access to them, we can make some others available. But having a clear financial plan is important because it helps you to create different scenarios. So what happens if I solve that financial problem tomorrow versus what happens if I can't do that for 6 months? What does that restrict me from being able to do? What does it enable me to do if I can do it sooner? So having a clear financial plan can help you to kind of map that out in a better way. When it comes to engaging with potential investors, it's really important that you weave in storytelling. This might feel like a less important or a lower priority thing, but in my experience, storytelling is as big a part as showing the credibility of the business model. A lot of investors, especially early stage seed investors in entrepreneurs, angel investors, they're really investing in you as a person. So yes, you need to have a sound business model and you need to have a sound plan, but they're really excited about where you're going and why should they go with you. Telling that story about why you care about this cause, especially for social purpose-driven businesses, is a really important part of it. It's a really important part of being able to repeat that story on a regular basis to get people to realize why they should invest in you, not necessarily the business, but why they should invest in you. You might get different joy from that methodology from whether you're engaging with your bank manager versus whether you're engaging with an angel investor. But that balance of telling that story where you're going, what will happen if you're successful? What change will you make to the planet, to the world, to your community, if you're able to deliver on this mission? Weaving that in and not just thinking that sending over a cash flow forecast is going to do it. That's going to convince people to come on board. It's much more important to focus on this bigger picture story and what you're looking to do. Another really important thing I want to establish at the start now is this idea of opportunity cost. And what I mean by this is that every moment, every minute, every hour, every day you spend on fundraising is time that's being taken away from doing something else. And so the easiest example to think of on this is that if you've got £10, you have kind of three options, unlimited options. But the opportunity cost of this is that, you could buy a round of coffees for your team. You might buy a cinema ticket, or you might pay a fraction of your rent. But when you commit to one, what you're really doing is choosing not to do the other things. And this is a really important philosophy when it comes to what you're choosing to invest in when you're growing your business, but equally the time you choose to invest into this path. I've seen way too many companies who have failed. I've had the experience personally myself where you overcommit to fundraising, to trying to engage with investors, to trying to go down that route, and you then take your eye off the ball in other areas. If you're committing to raising investment, there's an opportunity cost element here that selling to more customers, to engage with new markets, might lead to more value in exchange. So it's something which is really important to kind of bear in mind. So talking about crowdfunding, the basic premise of crowdfunding is that instead of going to one person for a single lump sum, whether it's £10,000, £100,000, £10 million, instead you go to 10 people for £1,000 or 20 people for £500. And when you look at it from that perspective, that might sound like a lot of extra work, but if you look at it from the perspective of the investor, they're able to spread that risk across a broader portfolio, which can give them access to different projects that, pique their interest, but equally from your perspective, it can make the sell a bit easier because you're not asking them to put in the full money and put all their eggs in your basket. That's the basic premise behind crowdfunding. It's a simple idea that most of us are familiar with now. When we think about crowdfunding campaigns, it tends to come down to what we think of as being the Kickstarters or the feeders or the crowd cubes, and a big part of that is having a really impactful, great video at the core of it. When you're doing that video, when you're creating that video, and it's not just the video, it's all the text that goes with it, it's all the copy, it's all the materials, all the resources, all the social posts, press releases, everything like that. And it's really important to have these kind of 5 C's covered. It's getting across your competence, it's explaining what is your calling, it's explaining you're credible, being truly candid, and being clear. So to kind of flip that and tell that in a bit of a different way, you might be aware or familiar with this poster. This was from 1958, and it's still just as kind of resonant today. So McGraw-Hill magazines put together this advert just to make it easier to read. It basically says, I don't know who you are, I don't know your company, I don't know your company's product, I don't know what your company stands for, I don't know your company's customers, I don't know your company's record, I don't know your company's reputation. Now, what was it you wanted to tell me? It's one of those really important things to think about when you are engaging with an audience on crowdfunding, whether you are trying to, whether it's online, offline, engaging with new customers, engaging with new staff, we're trying to think about how you're telling that story. And if we're breaking it down into kind of 5 C's, it's telling that story in such an impactful way that people are willing to get that line of, right, what are you trying to sell to me? So it's really important to make sure that you don't just rush straight into, here's a product, you need to buy this, but thinking about telling that story of who you are, why you care about what you do, what does the current customer base look like? And a big part of that is thinking about this idea. I think it was Anya's point there about the previous kind of crowdfunding campaigns. It's this idea of why are you crowdfunding? So, I mean, if I ask everyone in the kind of chat box to quickly put in an example of why they think they're crowdfunding, I'd be curious to see the first kind of 3 or 4 suggestions that come back in. But yeah, why do you think you'd be doing a crowdfunding campaign? I'm really hoping someone sets me up, by the way. Like, there's one answer I just hope that someone says. And it's not a trap. Yeah, to get more people to buy into the product, that's good. So it's audience raising. And yeah, that's exactly it. So I think often when we think about crowdfunding, so tapping into a wide range of people, yeah, that's it. So it's giving people a call to action. We think about crowdfunding as being funding, right? But it's really about crowdsourcing. It's about this engagement. So it's about getting people to make a difference. So that's interesting, Rainy, about getting money to build an MVP and reaching a wider audience from Lizzie. So yeah, it's you really want your crowdfunding to make a difference. You're really trying to tell the world that you're trying to do something different. You want to launch something, and you're creating an invitation for people to be a part of that. The idea of raising cash is, yes, part of it, but the raising cash is really about the commitment of that vote or that endorsement. The cash is someone saying, I believe in this so much that I'm willing to be a part of it, and I'm willing to part with some money and some cash to prove that. And so this, to my mind, influences what you see as being a successful campaign. So, and we'll talk more about this with some examples later on, but I think a lot of the time we think of someone who's like massively smashed their target or massively smashed their goal, or when you set a goal which has a kind of clear parameters on that, because you need to raise 20, 30, 50, £100,000, whatever that number is, that becomes the primary driver. In fact, like I'd suggest that you focus on how big of a community do we want to build? What validates or what gives us the data or the insights that this has been successful? That's a much more important way to look at the campaign on the round. We talked about that kind of competency, that authenticity. So this was a campaign we did a couple of years ago where we had a local newspaper that we published around things happening in Cardiff. There's a really important point here around the authenticity. You put your name on a campaign. It is you. It's not the company. It's you as an individual. It's not a faceless organization that's doing the crowdfunding. It's you telling that story. And a really important part of it is showing other projects that you back. So if you click on my name on a campaign or on whoever's organizing that campaign, it shows you all the projects they've backed. So it shows that you're not just someone who's there saying, oh yeah, no, now I need the money. Here I am. It's showing that you're part of a community and that you believe in the cause of crowdfunding. That's a really important part of it, is that if you see crowdfunding as being a route in the future, you want to show yourself as an authentic part of that community. It's not just someone who's using that as another tool to raise funding. Another part of that is the story that you can tell through your location, your age, your interest, being able to humanize yourself. If you've got a specific audience you're going after or you're trying to engage with, and you might already be engaged with, show how are you relevant to that community, like what makes you a part of that community. There's a really important part about the click and the sense that you're helping them to achieve their goals and to achieve what they're trying to achieve, and you're part of that good fight. There's also, I mentioned about the candor and about being candid. Don't act at any stage like this is zero risk. This isn't just for your crowdfunding campaign, but this is for you as an entrepreneur in every conversation you're having if you're trying to engage folks. When you talk about zero risk, it immediately, whenever I hear this from an entrepreneur, it immediately shows that either you're unaware of the risks, that you're too arrogant to appreciate how serious those risks are, but it also removes what counterintuitively can attract people to it, and that's the sense of jeopardy, this sense of you're going on an adventure, and there will be beasts, and there will be threat and risk. If we're acting like there's zero risk, it doesn't really convince anyone, firstly, and it kind of paints the picture that you're naive or that you're not fully aware of what the risk is. So be candid about what the risk is. Talk about the risks that the bears that you don't know how to defeat, and equally, the ones where you've got a bit of a strategy and a bit of a plan because you know what the weak spots are. Map that all out and be open with people about that, because in a counterintuitive way, the risk in telling people about the risk might excite them more and get them more involved. One really important part of that, the video, is making eye contact. It's speaking directly to one person, and it's not just speaking directly to one person. It's being so outspoken as to say, we cannot do this without you. This is not we're looking to raise some money. It'd be great if some people would give some money. If anyone's interested, this is how you can give some money. It's saying, I need you to do this. This is not going to happen unless you invest in this. There's a real difference that comes from speaking directly to one person. And that speaking directly to one person is using language they would anticipate. It's telling them what they want to hear in terms of, we believe this problem is big and we don't think we're going to be able to solve this without you getting involved. We cannot do this without you. That's the message. We all are bombarded with ads, with opportunities, with things that are interesting on a regular basis. Like Kickstarter right now, and there are tens of thousands of projects that you could engage with, and that we're not actively doing so because it's not, there's an opportunity cost doing that, right? So when you get that brief moment, that 30 seconds to make an impression on someone, don't make it easy for them to click X and back out and not commit. Speak directly to the people that you know would be interested in this campaign and ask them directly to get involved, and be clear about that. Following up on that, there's this need to understand what their interests would be. Why would they want to back this campaign? What's in it for them? So this generally breaks down into kind of four, and like I said, it's always kind of rule of thumb, but breaks down into four things. So it's either a cash return. So if I'm your bank manager, I'm going to want to know that you're going to make the loan repayments. If I'm a dragon on Dragon's Den, I should say, I can't stand Dragon's Den. That's not a good illustration of how funding works in the real world. But if you're a dragon on Dragon's Den, it's that return on investment. It's all of that kind of stuff. That's a different message to if you've got someone who's backing you because they believe in your cause and they want that warm, fuzzy feeling, or if it's a grant funder or a prize or an award or something like that. There are other routes. So coverage, this might be someone getting a research paper out, it might be getting some press coverage, it might be some articles or some bits that kind of tell the story of what you've been through. And another way is intellectual property. So that is if you file a patent at the end of it, or if if you're going for Innovate UK funding, or you have something as an asset that remains afterwards, which kind of ties in with that revenue capital rule of thumb. And spending £100,000 on building a website, an app, a new product, or something like this, that has some lasting value. So it could be seen initially as a revenue expenditure that ends up as being a capital outcome. So yeah, so these are things to think about. If you're making a video for your crowdfunder, you want people to walk away thinking, I'm definitely going to see my money back in 5 years' time, and I'm going to see, I'm going to get £10 back for every £1 I put in now. Are they going to want to know that they're helping something which is going to be, important for society or for your local community? Is it something which is local? Is it something which is global? Is it a bigger trend? Make sure that message is clear, and make sure you've profiled that based on the audience you're trying to engage with. In preparation, there's a stack to kind of cover off, and we'll get into some more detail now. It's things like, yes, your cash flow forecasts, it's all of your profiling suppliers, things like that. We'll really kind of get into this. But one part of that is this telling the story, talking about the future. It's not talking about this impossible future of, oh, we think there's a magical land over the mountain where candy canes grow on trees, etc. It's talking about where you're taking people, talking about the journey, the adventure, the next step, where we're going to be, when will we know when we're there, what will that milestone look like? So talking about that through the video, through your content, through your social media engagement, through your press, everything like that, it gets people feeling like, is it just about now? But the next step, there will be some other route for me to get involved. It's not just, I want your cash now, and I might give you a call in 2 years when I need some more cash off you. It's saying, if you invest now, you're going to get us to this next step. And at that next step, there'll be another opportunity to engage. So that's a really important part of it. And that ties into this idea of needing to have lots of constant conversations. This isn't just scheduling a month's worth of Twitter posts, a month's worth of Instagram posts, and leaving it to do its own thing. This is about having so many conversations with people, having them offline as well as online, having them well in advance of the launch. This isn't like the week before you press go, oh, I'm going to start speaking to a bunch of people. 3 months, 6 months before you launch the campaign, bring people in, make them feel like they're really a part of it. Listen to what they say and implement those lessons. This isn't designed by committee, but it's hearing. There's a balance in the line between what you think is right and what you kind of hear from the community, and hearing those clues and looking out for those clues as much as you can. Try to speak to as many people who have real expertise, people who've done it before. So Anya's comment earlier about, what did go well, but what really didn't go well last time I did it? What can you learn? And more importantly, keep on their kind of radar on the horizon what's coming up next. Make sure they're looking out for your posts on LinkedIn. Make sure they're looking out for your newsletter. Make sure they're waiting to hear about that next step. Give them, oh, next month we're going to be launching this, and make sure you hit that deadline so that they know that you are credible, you're reliable, you've got a plan that can be actioned. And a really good, if you've never seen me talk before, then this might be new. If you've heard me talk before, you will have heard me recommend this book 1,000 times. This is a really great book that gives a technique, skill set, approaches for how you have really good conversations with customers, not just customers, stakeholders, partners. It's called the MOM test. The guy's British, but I imagine he thought there was a bigger market for it in America, so I'll let him have that. But it's a really good way to understand truly if people are telling you the truth or if they're lying to you. And the kind of premise that sits behind it is not trying to convince people that your idea is good, but by proving it through building something that they need. It sounds simple, but it's the flip from you being the genius entrepreneurs having all the good ideas to understanding the customer's need, understanding where you fit in the market, and building something that kind of plugs that gap. So a good example of this is you might go into a sales conversation with a potential customer or with a potential distributor or a supplier or something like this, you might then come back to your office and say, oh, the meeting could not have gone better. They said it was an amazing idea. They've never seen anything like it before. They could definitely use it, and they want us to know when it launches. We think this is good feedback. This is bad feedback. This is feedback which is non-committal. It's feedback that anyone can give because they don't want to hurt your feelings, because they, you know, they're trying to feel like they're encouraging you or supporting you. And it's ultimately the feedback we crave is someone telling us, that's great. You really want to get people closer to what's it going to take for me to get you to commit to this? Can I count on you to be our first backer? How much are you in for? And the way you do that is you ask questions. And it's not about your idea. Like ideally in these conversations, you don't introduce the idea sometimes at all. Maybe you introduce it in the last 2 minutes. You want to ask about specific past events. So if I said to you, you know, I want to set up a healthy place to get lunch. You know, how much do you care about your diet and whether you're eating healthily? And everyone will tell you, yeah, I go to the gym 6 times a week. I eat salad every lunchtime. It's just who I am. And you say, okay, great. So what did you have for lunch yesterday? Oh, well, no, yesterday doesn't count. I had a McDonald's and a full fat Coke because I was on the way to a meeting. Oh, what about the day before? Oh, well, the day before I had this because it was, when we're talking to people about what we're going to be like in the future, we are, yeah, holy beings that live this kind of wonderful life. When we actually put that in the framing of the past, we hear a different story. So, and I'm also mindful about the irony of saying talk less, listen more when I'm just ranting at you. But yeah, you want to ask these kind of leading questions that get the truth out of people about what's really happening. So that if you said, I'm going to launch this new healthy eating place, it's going to cost you £20 for a salad, would you be interested in that? And you're like, yeah, I would like to eat more salad in the future. I think I'd be interested. Versus, when was the last time you spent £20 on a salad? Well, actually, yeah, no, I've not. Yeah, I've not done that ever. That tells you the truth about whether or not people are interested in your product and what you're doing. So, yeah, if you say one thing from this, I'd recommend getting them on set. And that whether you launch a crowdfunding campaign or not, it's a good approach to always take. And when I talk about talking to people, and also, I've not had a question in the chat for a long time. I don't know if that's because I've not taken a breath and given anyone an opportunity, but please do jump in if there's anything you want to kind of add in there. But when I talk about talking to people, you really want to talk to a really wide range of folks. So potential funders, big funders, small funders, friends who've always said that, you know, they give you a backing if you ever launch something, or yeah, there's always that kind of friends, family, and fools group of folks who might come in. Members of the public, people you don't know, people who don't have a vested interest in what you're doing, friends of friends, that kind of stuff. Also potential suppliers, making sure you've got that lined up. That was, I don't think I mentioned this later on, but that was one of the big issues we had, was that one of the members of the team, we gave the task of making sure all the suppliers were lined up. Turned out he hadn't done that work, and all of the budgeted costs that we had for the rewards kind of went out of the window. Yeah, so making sure you've kind of double, triple checked that stuff, and thinking about all those people who could be a backer, who might be a backer, who definitely won't be a backer. And so one example of a campaign that we worked with was for a coffee shop in Cardiff. This was a really kind of exciting one because they already had an engaged community, but they also had a really tight time frame to kind of get it done. So they set themselves 7 days to raise the money, and it was closing on the Saturday evening. On the Wednesday, they barely hit 10%. So at that point, we started to engage with the community in a bit of a different way, targeted those kind of bigger funders and influencers. And we'll talk about this a bit more coming up shortly, and then we followed that up with a kind of stretch goal as well. So that was quite an exciting one where, and going back to that point about why would you do a crowdfunder, as a coffee shop, they get people going in there every day now who are loyal to that brand, who are committed to supporting that and want to succeeding. So yeah, so factoring in all of that community engagement, not just hoping it happens because you put the platform, the crowdfund live. And equally, the other important lesson here is that if you have ideally you want a good start, the momentum you pick up at the start, that has a massive bearing. If a crowdfunding campaign starts with 50% raised already, you're much more likely to raise than if it starts with zero. Even if it's just you putting in the first £500 yourself, or asking your brother or your partner to do it. You need to start with momentum. No one's going to be the first person to put money in. I find this another kind of a bit on a tangent, but when people do that kind of charity donation thing on Facebook for their birthdays, and they say, I'm looking to raise £150, and it says zero. If you've not even put the money in yourself, then you're immediately kind of, you're not giving people an impetus to kind of follow the crowd. So make sure you've got that kind of starting point nailed. But it is to say that even if you do that, even if you don't do that, sorry, it doesn't mean you can't save it. It just means you have to work a lot harder with the kind of window closing. So I want to do another quick task. I want to take about 2 or 3 minutes, and what I want you to do on the paper in front of you again, well, actually, let's do this straight into chat, is I want you to consider everything that you need to have planned on day one when you're launching your crowdfunding campaign. So everything you think you need to have ready in order to make that crowdfunding campaign a success. So yeah, put it straight into the chat. We'll give it about 2 minutes. But yeah, I'd like to hear what you all think. Yeah, what you think is the most important thing, what you think is the complicated thing. Okay, what have we got? Fund value, yeah. The vision, graphics, content, that's good. The fund value is interesting, yeah, because it's that idea of what's the minimum we need and what's the kind of the ambition, and how do we create strategies around that. So we'll talk a bit more about that as well. That's good. The vision's good. Previous build up on social media, yeah, that's good. Dates, yes. So having a full schedule. So that's the kind of campaign going alongside, as well as when you're going to launch. When you're going to launch is, yeah, we'll talk about that in a bit more actually. Video content, an engaged audience, people engaged ahead of time, clear ask, what rewards, who to approach, people's contact details, video and a clear story. It's good, right? So yeah, essentially, we'll give it maybe another 10-15 seconds in case anyone's got anything else to come in. What is a good reward? Yeah, Darren, that's good. That's a very good question. So yeah, so essentially on day one, you need a lot of stuff. So the video, you need an idea of the rewards. As Rosie mentioned, by the way, these slides will be available, so don't worry about having to scroll things down because it's something that wasn't on your list. So yeah, so video rewards, social media campaigns to sit alongside that, which social media platforms, who's leading that, the content, media assets, press coverage. Is your company already formed? You need to be formed before you do this. What is the target? When I talk about the time of campaign, is it 7 days? Is it 30 days? Is it 3 months? Is it launching on payday? Is it ending on payday? Is it launching, in the summer? Is it launching in the winter? All of these things are quite important when it comes to building momentum. What platform are you going to use? The bios and the information about the team, what your data policy is, what insurances you need to get straight, your website. What are the consequences if you overachieve and if you underachieve? And I've got some examples to share on that in a bit as well. Your ability and capacity to deliver, the project management plan. I think who shared that just then? Yeah, so yeah, having that kind of full Gantt chart mapped out. The competition map, you might use that internally, you might use that externally, depending on who you're engaging with. What are your follow-up campaigns? What happens if it's successful or if it's not? Your business plan, your bank account, like I say, ideally 50% initial backing, and then what the costs and consequences are of delivering those rewards. So there's quite a lot of stuff to think about. There are, again, rule of thumb, typically kind of 4 different funding options when it comes to the crowdfunding platform. So there's equity investments, there's debt, sales, and donations. So equity is the dragon's den. I'm going to give you 10% of my business. Today it's worth £100,000. In 5 years, it's going to be worth 20 million. Debt, most of us are familiar with, but there's crowdfunding for debt as well, which essentially rather than putting your money into a savings account, you might decide to make it available to entrepreneurs who might pay higher interest or lower, depending on what your appetite is. Sales, which we'll talk a bit more about in a second, then donations, like I mentioned, that Facebook gifting, but equally it's like, just giving and things like that. If you run a charity and you want to set up some challenges for folks who want to jump out of planes or do marathons. But to use the example of Kickstarter again, so this essentially is one where, yeah, you're either selling your product or you're getting backers interested and involved. Oh, was that an accidental hand, Lucy? Or was that
no, it's a real hand.
Yeah.
May I ask a question about this?
Absolutely.
It's kind of for someone else, but could a crowdfunding campaign work if the idea of, the business, for example, was so beneficial for the environment, for example, and rather than it being you can buy a bit of the company or you can get these cookies, and it just is you're donating because if this idea could get off the ground, it could change the world?
Yeah, so absolutely. The thing to find is what the hook is that's going to convince people to invest now. So this is the really important part of it. Is it is so easy for us all to ignore every crowdfunding campaign that is live right now. What's the thing that's going to make me invest now, and what's going to compel me to be one of those people who's in that initial group? So yeah, that's where the rewards can come in quite handy, but where there's potential consequence as well. So if that's a good example. So what is the thing that someone wants? So that thing might be a thing or it might not be a thing. That thing might be a sense of, so like if it was a carbon offsetting platform, for example, because the other thing to think about here is that we might be talking about like a structured, formal crowdfunding campaign, but equally it could just be engaging with a crowd to crowdsource resources, means to take your company or your mission to the next step. So that thing that someone wants, it might be a product or an item or a credit. It might also just be a sense of satisfaction that I've done something toward the cause, and that's a kind of justified reward as well. It's important to have lots of tiers, to give people options to start low, and we'll talk more about that, about upselling and things like that. Although what I just said, Lucy, about it can be a range of things, it tends to always be good if it's something quite tangible. So something which I get a sense of, oh, I have that reward, and I'll give some examples in a bit. And then exclusive. And what I mean by exclusive is this is the thing that drives the urgency to do it now. So it's almost that if you don't do it now, you're never going to get the green version of our product, or you're never going to have this option to have a founder partner engraved on the side of it, or whatever that thing might be. So to give some kind of specific examples, it could be a voucher for when the venue opens. That can work quite well. So you're setting up a coffee shop or a restaurant, that can work quite well because it guarantees you'll have people sat at the tables when you open, but it's essentially taking revenue from tomorrow to speed things up now. So that can kind of work both ways. Name on a wall or something like this, that's always a really neat way, and I'll show an example of why that works best. But yeah, I'll say that story for a second. T-shirts, other merch, some people go for it, some people don't. But thinking about for your business, for your idea, for your concept, is that something you think your audience will go for? That's, again, asking the right questions at the start about, have you funded a crowdfunder before? What reward did you choose? It's not saying, we're going to do a crowdfunding campaign. Would you back us if we give you a T-shirt? That's not going to give you the answer. It's saying, when you've backed crowdfunding campaigns in the past, what rewards really incentivize you to do that? And then that kind of, that really exclusive thing, one of a kind, that shows they're special for backing that campaign, something that's really unique. Try and think about those kind of creative ideas is quite important. So yeah, to follow up on that example of name on the wall, there's a chef called Tommy Heaney, and he funded the launch of his restaurant through, I think it was Kickstarter. And yeah, essentially then he has this plaque in the restaurant with everyone's name. And every time I've been back to the restaurant, everyone looks for their name, everyone takes a picture, puts it on Instagram, puts it on LinkedIn. It's that sense of you're creating future value as a result of doing that thing. So giving people credit, everyone looks for their name and everyone wants to feel like they're part of that community. So if you have a premises, or if you have a way you can do that, it could be, secretly engraving it on the inside of your product. I don't know if anyone's kind of familiar with that old Steve Jobs thing, but yeah, so there might be other ways of being able to show that and show they're a part of that community and show that without their backing and their belief, it never would have happened. That, that lasts for years and years to come. So while the campaign's underway, you really want to be constantly engaging your backers, promoting on all of your platforms. This might not be all of your platforms, right? If you've done that right engagement at the start, you might know that your community is not on LinkedIn, they're on TikTok, or they're not on Instagram, but they're on Twitter. So understanding where they are and where they live, regularly having good news. It's not just saying we're live and then it's just silence. You really want to show that momentum's building and that there's good stuff happening on a regular basis. Introducing new products, introducing new rewards, having stuff held back at the start that you can bring in at week 1, at week 2, week 3. And part of that is building in this incentive for people to refer. So saying, oh, if you recommend a friend, because if someone's backed your campaign, chances are they've got friends who would be interested in backing your campaign as well if they've got aligned interests. So offering those referrals, offering those upsells. This is similar to any kind of sales technique, but if you can get your existing customers to give you an extra 25%, that's a much more effective way of growing that overall amount than trying to find 25% of new customers. So yeah, encouraging people to talk to you, reaching out to everyone who's backed you, just saying thank you. Love to hear what you liked about this, so you can emphasize different bits and make them feel part of it. Because even once they've backed you, they can still pull back out again in the future, right? So make sure you've kind of got people locked in and they're kind of incentivized to stay with you. With crowdfunding, there's kind of 2 examples of different campaigns. You've got the kind of keep it all campaigns and the all or nothing campaigns. Keep it all, it is what it says on the tin. If you're trying to raise £10,000, you raise £8,000, you keep that money. So essentially, you didn't hit your goal, but you keep that money. Whereas with the all or nothing, if you didn't hit £10,000, you don't get the money. This might feel like a bit of a no-brainer in that, well, let's go with keep it all because at least we get the money. Actually, the data shows that all or nothing campaigns are twice as likely to succeed and on average raise twice as much money. And I think the reason here is that what you're saying is that if we're going to do this thing, we need £10,000. And if you don't come in, we're not going to do it. That jeopardy again seems to psychologically really drive people to want to get involved and get behind it. And the flip of it is, yeah, if you said you need £10,000 and you didn't raise it, is it moral or ethical for you to keep that money? You said you need that money. What does that mean? So again, it's thinking about those things. What will your audience go for? What does your audience need? And can we afford to be as high risk as that, as high stakes as if we don't hit it, we don't get it? And yeah, picking back up on one of those things from earlier. So setting a lower target that gets you across the threshold and makes it a successful project, but then building in stretch goals is a really good way of building momentum and getting people excited about what's coming. So I mentioned the Big Moose example earlier, the coffee shop in Cardiff. What we did there was they hit 20,000. We got a stretch target of 30,000, and we created quite a big hairy incentive for people to do that, which was at that point creating them buying a van to be able to use for doing outreach and activities like that. So stretch targets and having them planned in from the start, it can be a good way of being able to build that momentum. People feeling like they're backing something that's a success and it's worth them paying attention to. But the flip of that, there was a crowdfunding campaign called Zano, which is for a drone that in theory would follow you around, take pictures of you doing all sorts of things. They raised, I think it was 2.4 million pounds, and they didn't deliver a single product to anyone. And in essence, the message here was that they just couldn't cope with the level of demand. And actually, if you look at most, if not all, I think it's most, there are some that are successful, I don't want to be harsh, but the most successful campaigns like the Coolest Cooler, a lot of these ones that have been high performers on Kickstarter, many of them have kind of failed then to be able to deliver products to their customers because they just haven't been able to keep the demand. So think about, do you want to set a cap? You can do that. You can create ways to create a cap. But you want to, create conditions where you don't get so overrun. Everyone wants it to be successful, right? But you don't want to end up in that situation where it doesn't work out. And then, yeah, so to kind of wrap up on that, there are reasons not to crowdfund. And the simple ones essentially are the time it takes. you cannot underestimate how much time it takes to run a successful crowdfunding campaign. You're engaging with customers all hours of the day. You're scheduling posts. You're trying to structure your media. You're trying to run your business at the same time. So it takes a lot of time. There's a lot of costs that come from even simple things like the platform fees, the cost of getting the merchandise out there, all of these things. There's a really good campaign run a couple of years ago that I went to a talk off, and he was saying when he raised £120,000 on one of the platforms, everyone was looking at him like, you've made a massive success out of this. He walked away with about £2,000 margin. So the numbers might seem big, but when you break it down, when you're looking at the rewards, when you think about the costs involved, when you think about all these things, for it to be profitable, you have to put a lot more into it than just hoping to hit a high number. You have to really think about all the consequences in that. The exposure might be good in some ways, but it might be bad if you're getting your message out there too soon and you're giving your competitors all of your secret sauce. You might be kind of losing out on the opportunity to be able to do that. So the other side of it is you become a target. I remember one thing that really stuck with me from crowdfunding was put the campaign out there, and someone sent me a DM saying, "Oh, you've got the begging hat out. Is everything all right?" And it wasn't. They read it as we were desperate for cash and we're asking people to give us cash, as opposed to seeing it as building a community and all of that good stuff. So yeah, thinking about where you can potentially become a bit of a target when you put your head above the parapet. And then, like I say, that thing of if you take the cash out now, you won't have the benefit later. So if you are starting a coffee shop, you raise £20,000, and then for the next 2 weeks, everyone who's coming in is using their vouchers and using their credit. There's no cash going back into the till. So that can create a bit of a tricky balance. But ultimately, going right back to the start, it's all about opportunity cost. And is that thing that you're choosing to spend your time on the thing that is the best way for you to ensure you're going to scale up and grow your company? Are there other ways, whether it's sales, whether it's raising investment in traditional ways, that might be a better way to do it? So that's it from me. Like, I think I've timed that very well indeed, but not for questions, although I'm not dashing off. There are a couple of other things I wanted to share. So we have a reading list. Like I said, these slides will be available, but there's a reading list that we have on our Town Square website of good books that I'd recommend if you are trying to lead a socially responsible or a purpose-driven business. And then 2 other plugs. So firstly, my contact details. So if you want to follow up directly on any of this stuff, please do. But equally, my link for my LinkedIn is there, and I do a weekly newsletter. This week will be a summary about this topic. So if you wanted to get that in your inbox on the weekend, just scan that QR code. It's free to sign up. There's no cost. It's just, it's called The Good Founder. It's things that I wish I'd known when I was first getting started. So hopefully there's some good resources in there. I'm not in a mad dash. If anyone wants to stick around for 10 minutes just to ask any questions, or if not, anything you've got in the chat, or turn your mics on. But I hope that's been useful and shared things that maybe you'd not thought about with crowdfunding before, and hasn't just been this one guy just ranting at you about stuff that you've got no interest in. So thank you very much for joining us for the session.
Oh, brilliant. Thank you so much, Gareth. As always, huge amount of information, and great presentation. So thank you so much. Really, really useful. If anybody's got any questions, feel free to put your hand up or put them in the chat, whatever you're most comfortable with. Anya.
Thank you so much, Gareth. Really useful. Absolutely. I have one specific question, which I don't know, to get an answer for would be great. So we've been thinking about doing a crowdfunder for a youth engagement work. So something, as we're touring a show around county lines, we are looking to do a lot of youth engagement work around every location that we're touring to, and have like a whole week beforehand with a group of young people. And for that element, we would like to crowdfund and fundraise. 2 questions now. Is it more sensible to do one big crowdfunder that goes out to everyone, and then we hope that everyone supports it, as in everyone, all of the different locations? Or is it almost better to do 10 different crowdfunders for each location, one that is almost the same, but then goes more specifically targeted to people in that location? And then it would be the case of saying, if it doesn't happen, if we can't crowdfund to the 5K that we need or whatever in this location, it won't happen. It's like, what's better?
Yeah, that's a really, 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 really good question. So the first thing I'd always suggest is have a look online for anyone who might have taken a similar approach. So I know this, and that would be looking at specific niche groups. So I know, for example, the one example I've got in my head was Indigenous peoples in Canada. Were looking to create extra resources and things. I remember seeing a campaign around that where I feel like they took a similar approach. I couldn't say one way or another which way is more or less successful. But what I would say is there's kind of two things I see here as being the cost in terms of covering those costs, which might create that urgency for people to get involved. But it's also crowdsourcing interest or resources and things like that as well. So there might be another element here, which is about a call to action or a pre-campaign activity, which is saying, if you want to see this happening in your area, we want to know what skills you might be able to volunteer or what you might be able to do to provide additional support in that way. So I'd almost break it down into the two parts, like what are the things people could get involved with, which might be them distributing flyers or leaflets when you do go live with a campaign, and then equally then turning that into the actual financial element of this that we need to hit. You've kind of established that foundation then by then. I don't have a right answer about which way would be best, whether you do it locally or but I'd really, if you can keep in touch and let me know, I'll put that out on LinkedIn as well and see if there's anyone who's got any ideas, because that's I'm really fascinated by that idea. That's really interesting. Whether you almost create competition, but you're creating 10 campaigns to have to manage at the same time, which would not be fun. That's the other factor.
Exactly, that's my worry, I guess, that because you need weeks to run one campaign, so running several campaigns in short succession, because the tour would be obviously every week. So it's I'm not sure.
And it's also, I think,
as a team, whether that's even feasible. And mostly crowdfunding goes to people you know already, and then maybe a bit further. And I don't want to be bombarding our people with the same call to action, just in different locations, or whether we don't target our people at all and just hope it goes out to others. I don't know. It's a bit of maybe it's a bigger part of a single central campaign and then smaller local campaigns. So say, let's use the number 5,000 for each area and you're doing 10. Maybe it's going for 25,000 core funding and then making it 2.5 in or there's like you don't want to lose the money that people would want to contribute because they want to back you, because they don't want to fiddle between all the different campaigns. There are lots of different approaches to that. I'm really interested about that question.
Cool, awesome, great question, Anya. Darren has asked in the chat, are the businesses that can support a crowdfunding project? My issue will be time to undertake the project. Yeah, that's always the big question, isn't it?
Yeah, so there are different groups that you can go to. Sorry, Darren, do you want to ask that question with a bit of context as well?
I've got this business and another business, and so for me, I've been wanting to do a crowdfunding project for a little while, and then I get sidetracked, and then it goes on the back burner because you're chasing the most important, prioritizing your cash flow.
Quite right.
Yeah, and so that for me would be a useful thing to outsource it, and so you just say this is what I want to achieve. Can you develop the project and get it going? There are organizations that do that, and there are like agencies, like PR agencies or marketing agencies that can kind of offer that service as well. What I would say is that it tends to be more effective when people know that it's coming, without sounding too fluffy, from your heart.
You know what I mean? It's that
coming from you. Right. Because people buy you.
And that's really where the opportunity cost trade-off comes really is. You can justify saying, right, I'm putting everything else on hold, or I'm doing half days here, and that might be going to a different workplace or working in a different way, or something that delineates that time. And that's why we're working on the campaign. Or it might be, taking the team away for like a retreat weekend or something like that, and saying, right, if by the end of the weekend we're confident we can do this, we do it. If not, we put it back, back on the shelf, and we come back to it when we feel like we've got more time and more resource. But there are ways you could augment that by saying, right, now we've got the framework, we'll go to this agency who can help us with that part of it. Or now we've got the framework, we'll try and engage this group of volunteers who might be able to support us with other parts of it. So
okay.
yeah, you could 80% go to another agency, you could 100%. The varying levels of success then and authenticity would kind of dilute and show up, I think.
Okay, cheers.
Cool.
Awesome. Yeah, I know when we did our crowdfunding campaign, we just had somebody kind of managing that for us, just on a kind of part-time ad hoc basis, and actually just having somebody managing it was quite good, because even though we did the initial video and the blurb, so it was coming from us, it was just good to have somebody that was like on top of it, so that they could manage like getting in the rewards, for example, that that kind of thing, all those kind of extra bits that are quite time consuming. So yeah, that's what I think I need someone to manage it, and then say to me, this is what we need and this is what I need from you, whether it's a personal video or something, whatever. So that's what I'm gonna have to work on.
I think accountability is a big part of that as well, right, Rosie? That knowing that person is going to pick up all those messages, knowing that person is going to drive things forward, so it doesn't just kind of fall. But that's the thing with any kind of project management, really.
Okay.
Benjamin.
Yeah, hi. Can you hear me? Is that okay?
Yep.
Yeah.
Okay, super. It's quite a complicated question. I'm not quite sure how to formulate it, so I'm just going to kind of throw a few sentences out there and hope it makes some sort of sense. We are post seed, but we've had a slight bump in terms of our corporate structure, and I've had to bankrupt one of the companies so that we can move forward. So now we're in a situation where the next ask is at 2 million, but we have, as some of the other people have talked about, we have cash flow issues right now. Do you or have you had any experience with how to restructure equity when we already have angels on board, we already have some IP equity, but we're starting from scratch with a new company, with a sort of kind of valueless company, and we're trying to bring back together the different value adds that we had separated out into the different company structures. And of course, at some point, we hope to get VCs on board with the 2 million, but in the interim period, it might be viable to do some sort of short-term crowdfunding, and how we would kind of structure that legally regarding all of the different things, because everything's a complete and utter mess, obviously. So it's kind of like, have you come across that kind of an issue before? It's kind of seems a little bit like we did crowdfunding a couple of years ago, and it was great for what we were doing then, but we've kind of moved on from that now, and I'm just wondering whether or not I'm going to be causing more problems for myself than I'm solving.
It depends on how you do it, right? Like, I think this is the kind of many ways to skin a cat thing. In that, is it product or service based?
It's SAA, it's SaaS, basically, software as a service.
So the kind of trick there is, like, I'd say this is probably a case of dividing this up. The thing you want to avoid is a down round, right? Like, that's the thing. But equally,
that's exactly right. Exactly. We can't do. What we don't want to do is dilute the equity that we've already built. Yeah.
So I'd say there's an element here where you could bring some of it in as revenue if you do a crowdfund around, we're launching version 2.6, and that's going to have these extra features and functionality. So you're kind of getting that revenue in quicker, but also providing the evidence of an engaged community for a fundraise. I'd say it's almost that of like looking at, right, 10% of that 2 million, let's go for a 200 grand target to say we want to try and engage our existing customers who get 6 months for the price of 3 if they commit now on this, create a deadline to get that urgency, and which then forms part of the narrative to go to VCs and to go back to the first round of investors to call follow-on funding and things like that. I think that's where I'd be focused more on, is trying to re-emphasize the momentum as opposed to giving people the heebie-jeebies about, oh, this is kind of you know, savior funding or anything like that. That's where you could kind of break it down into, right, but it's always trickier with Stash, right? It'd have to be some kind of incentive that then doesn't take money out of your pockets for the future as well.
Yeah,
but
cool.
I'd say that's probably yeah, I don't know, Rosie and Grant, if there's any kind of lawyers or accountants who've been in the mix around that kind of fundraising, especially around, yeah, turning it around. But I'd say you're talking maybe 3 or 4 different approaches here.
That's good. That's good. Lucy, Lucy inspired me to join the meeting, so that's awesome. And you've given some really good feedback. So I've got some ideas now. So that's really awesome. And maybe we can kind of connect again at some point, because I'm in Lucy's space, so it's all awesome.
Cool. Just jumping in response to your question, I'm also wondering that, so there is a local law firm around this region called Taylor Vinters, and they're also based where Oxford University Innovation is, who handle the spin outs from the university. So with Taylor Vinters, through the program, we've actually, I'll send you a link. In fact, I'll put it in the chat now.
I've already communicated with them.
Okay.
I pitched at the Hartwell 2 weeks ago with the Oxfordshire Green Tech. So yeah, I'm in communication
if you know
with them.
That's great. It's just that they offer
on.
sort of, yeah, they offer a free 30-minute session, but quite frankly, I know exactly the way it works. There's actually a lot of people have found it useful to get some basic information, but clearly at the end of it, that leads on to, oh, and by the way, we can provide you these services at this cost if you would like to. So as long as you know them, they're in that
Well,
space.
send me the link again, just in case because I met loads of people and took loads of information. So if you will be a superstar and send me that link in case I've, right.
It's in the chat now.
I've got it there. Let me just double check it.
Great. I'll pop it in the follow-up email as well. So
fabulous. All right. Yes. No. Well, this was that was offered. Yeah, I have seen it, but it's great to still have a copy of it. It's fantastic. Superb. Thank you very much.
Brilliant. Okay. Well, I think we will leave it there, if that's okay. If anybody's got any follow-up questions, I will share Gareth's slides with his contact details, and obviously you've got my email as well. So yeah, do shoot us an email if you've got any further questions.
I will just put those links in there so you've got them as well. There you go.
Awesome. Brilliant. Thank you so much, Gareth. That was brilliant as always.
Thank you.
And thank you for joining, everyone. And yeah, see you soon. Have a good afternoon.
Thanks, everyone.
Bye.
See you soon. Good luck. Bye.
Have a good afternoon.